Hey guys, you've joined us live at Moneycontrol. I'm Manisha Gupta, and the focus today is clearly on the crude oil prices because that is what really seems to be making headlines as well. So if you look at the prices, we've seen 5% of decline in the overnight markets there, and with this, the crude oil prices have declined by nearly 8% for this week itself. Overall, when you look at the markets, we're trading at a one-month lows right now, and that is also because we were overbought. When you look at the prices in the month of September, we saw a gain of nearly 9%, and for the previous quarter, it was a jump of nearly 27%. So clearly overbought, and some profit taking from the hedge funds and money managers was in the coming there. Well, there are various factors that the screen is looking at as well. The decline also comes in because the gasoline demand has seen a decline. The prices here are trading at a 9-month lows, and the stocks in the US are at a 2-year highs right now. Not just gasoline, the heating oil prices also have seen a sharp decline, 5% overnight as well. And the statements coming in that Russia may lift diesel ban in coming days has been also impacting the prices on the lower side here. The markets which were expecting that crude prices were heading to $98 and $100 a barrel have clearly changed their views here. There also are key triggers like OPEC and allies making no changes. We also have higher supplies coming in from Nigeria, Turkey, Iran and Iraq, all of those countries which seem to be weighing onto the markets right now. Let's discuss in on where the prices could be headed from here, and for that we are now joined from Axis Securities by Pritam Patnaik. Pritam, hi. And what a volatile past 1 week. On the prices, first of all, what's your sense on where are we headed from here?
I think prices are going to be under pressure. My sense is very clear. I think we were very surprised when the prices rallied to about $95, and that was on the back of the fact that the OPEC did not want the prices to correct. I think it's a little bit of bullying from their perspective, if you ask me, in terms of doing production cuts. As far as the demand cycle goes, I think the pre-COVID demand being built up, all that story about China demand being coming back into action, I think it's still not there. It's a given fact that the headline numbers for growth, be it in Europe, be it in China, be it in even US now, are not looking so positive. So there was never a huge consumption story built up. I think what really supported crude oil prices and kind of took it to the level it was the sheer tenacity by Saudi Arabia and the likes of Russia, who said that they'll continue with the production cut. Saudi Arabia said about 1 million barrels a day, and Russia was about 300,000 barrels a day. And that kind of supported the prices and took it up to a level where it did. But my sense is that I think right now we are closer to equilibrium. We'll see prices moving in a tight range of close to about $80 on the lower side and in about $87 on the higher side for the near term. My sense is that. But you can never be let go of any surprises that can just spring up at any point of time. And that can either happen by an aggressive action by OPEC, or on the downside, it could be something triggered by the conditions of the global economy that it is currently in.
So, Pritam, if you were to look at wildcards from here, which one would those be? Is it going to be the dollar index, Chinese demand, and what else?
So I'm really, I think the 30-year bond yields touching 5% is an ominous sign, right? I mean, we've seen it last in 2007. I sincerely hope it's not a repeat performance of that. But if that were to happen, that would really collapse the demand very significantly for us. And we're seeing signs of slowdown happening, right? And my sense is that is one thing, along with the dollar index, which is already was very close to about 107. If it makes an attempt to reach about $110, that could really push prices down for crude oil significantly. But on the positive side of it, and another thing is in terms of the positive side of it, if you look at it, my sense is that intervention by OPEC, by coming and saying that they would cut production or at least give a guidance saying that we will continue to cut productions beyond 2023 and even in the calendar year of 2024, that could push get some support for prices. But would it run up the prices towards $95 again immediately? My sense is looks bleak.
All right. With what we've done in the third quarter, almost a 27 to 28% of gain. So if I had to tell you to put your neck out, I know how uncertain this market is. What's your sense for the final quarter of this calendar year?
Like I said, I think it's going to move in a range of $80 to $87. I think that's what it's going to be. And it's going to be very data-driven. Unfortunately, this data is not only going to be looked forward from crude oil perspective, but broader markets from both precious metal and even industrial metals. everything is going to depend on how the data is going to pan out in the US broadly, right? And because that's going to take a decision, I mean, that's going to drive the decision for the Fed as far as interest rate hikes goes. And that's going to impact all the commodity markets largely, along with obviously the dollar index. That's going to play a very crucial role. So my sense is that anything closer to $80, I mean, just with a very strict stop loss, one could try and, take a buy call, and closer to about $87, I would go short. I mean, I would play this range for a time being, and and not look at a very runaway kind of a movement on either sides. But like I said, if any of these developments kind of move on, then you could basically have a very sharp fall or a rise beyond that level.
Okay. My final question is on OPEC and allies. The 4th October meeting is come and gone, and we haven't seen any change come in from them. What's your sense that for the rest of this year, what would you expect from the cartel?
I think my sense is that, there are two things. The cartel has always been very, very protective or sensitive about price drop. They've not been bothered about price rise, clearly, Manisha. So then I think the overaction or overactivity will only come if the prices drop beyond a particular level. And my sense is that is the mark of about $80 a barrel. This is the WTI I'm speaking about. If that happens around $70, $75, you'll see OPEC again coming into activity. But I think till it kind of maintains the $80 mark, I don't suspect that they'll come and do anything very significant in the last quarter. But this could be the famous last words. You can never know with these. So that said, the non-OPEC members, interestingly, the production levels are going up. Manisha, another thing, very interestingly, I think gasoline, which constitutes about 40% of the distillates, right, and the crude oil. I mean, there are two headline numbers. One, the growth in the absolute build-up is at a 2-year high, and also the demand is the lowest since 98. This says a lot. And then that we're going to the winter season, heading towards winter season, where the driving in US anyhow kind of slows down a little bit. Will that also impact on the demand side further, in addition to the slowdown and, like I said, all the suspicion about the global economy slowing down a little bit, will impact obviously the demand. So my sense is that OPEC will not do anything drastic unless it's moving in a range. And my sense is that anything above $75, they're going to be comfortable. Anything lower than $75, I think the hands will be forced to kind of come back and recalibrate that market.
I get your point, Pritam. Well, yes, it's a commodity. No one knows on where it is headed. And we've seen the prices go to 147 and then minus 37 as well. I mean, we've lived through all of those price moves there. But we get your point that 80 to 87 perhaps is a near-term range that the crude prices could be traded within. Thank you for joining.